Time now to listen to another expert voice. Joining us on the show is now Nilesh Shah, MD at Kotak AMC. Mr. Shah, share with us your first take on the budget. What stood out to you and where were you expecting to hear more?
So this is the budget, in the words of Finance Minister, which preferred reform over rhetoric, action over ambivalence, and people over population. This is first budget in my career where I have seen capital expenditure exceeding net market borrowing. This budget has many announcements. Some are negative for the market. For example, STT increase. Some are negative for investors, like SGB will be subject to capital gains taxation if brought in the secondary market. But there are many positive announcements on skilling, on new industry, manufacturing. A lot will depend upon execution. So I will say this is overall a budget in continuity following the path of fiscal prudence.
Mr. Shah, you mentioned about STT being a negative announcement. How do you see it actually? Do you think it is a prudent step or it is kind of discouraging in FNO participation?
Truth is relative. From finance minister's point of view, this is like a sin tax. 9 out of 10 retail investors lose money on speculation. This has been proven time and again, and yet people want to speculate. Finance minister is increasing tax. If you are speculator, you are paying higher cost. Undoubtedly, no one is going to be happy paying higher taxes. On the other hand, there is also a set of market participants which believes that STT was levied in lieu of capital gains tax. Now STT keeps on increasing and so does capital gains. So it all depends upon from which side you are looking at this. From finance minister's side, STT is becoming like a sin tax to discourage speculation. From investor, it is breach of promise between STT and capital gains. And for speculators, they are agonized because not only they are losing money in market, but they also have to pay higher transaction cost.
Okay, and Mr. Shah, let's talk about cloud and data centers. The finance minister has announced a tax holiday up to 2047 to foreign companies providing cloud services to data centers in India. Do you believe this boost is enough to get the data center momentum going in the country, or is more required on this front?
So again, it is better late than never. There were times when Indians were largest user of multinational companies' platforms, and yet they established data centers in Singapore and Malaysia and other countries. Forget what they put up in America. We allowed Indians' data to go abroad. Now we are bringing data privacy laws, data localization laws. And at the same time, we are also providing benefits to them. We are one of the largest user of telecom. We'll probably be providing the largest data, as Chinese data is not available to the outside world. There is economies of scale if these data centers are established in India and they start servicing not only Indians, which are the largest data provider, but also rest of the world. As I mentioned, better late than never. Execution is something which will be most important in ensuring that this provision does create data industry.
Mr. Shah, one of the announcements which has been there in the budget mainly has been the fiscal deficit target, which has been slashed to 4.3% versus 4.4%. Do you think it is very much achievable?
I think it's reasonably achievable. The tax collection numbers, despite drop in GST of about 3%, is reasonable in low double digit. We think fiscal deficit numbers are easily achievable. In fact, if government focuses on asset monetization, divestment, probably there will be ability to improve upon this number also.
Okay, and lastly, Mr. Shah, there have been a lot of announcements on very labor-intensive sectors like textiles, leather, agriculture. What are your thoughts on all of these, and how are you reading the balance between announcements on goods versus service-oriented sectors?
So, in the first phase, this government focused upon developing infrastructure. In the second phase, they focused on manufacturing through PLI schemes and Make in India campaigns. Now the focus is on services. Unlike goods exports, we have much higher market share in services exports. And the target is to probably increase it by almost 70-80% over next couple of years. This budget is focusing on services sector, from data center to artificial intelligence to medical tourism to tourism. And I presume this combination of focusing on infrastructure, manufacturing, and services is appropriate.
All right, let's shift our focus back to STT, where the shock to derivatives market was there today. In fact, the whole market. And we also spoke to Ashish Chauhan regarding the same. Let's listen into what he had to say on this steep STT hike.
Last 11 years, they've increased the options-related STT many times. And today also they've increased a little. But futures probably is happening first time. Because futures was not considered that rampant. And by increasing it, they are trying to also in some ways compensate for the lower STT that they've seen in the 25, 26 actual results, because they were expecting, I think, 70,000 crore. It has become much lower. And in some ways, it seems to have two-pronged framework. One is the reaction to satisfy people who want to reduce the over speculation and also in a way go towards other creating other sources of revenue. Because India is growing, the people who are participating in markets are growing. I don't see, other than next 2-3 months, any impact on either futures volumes or options volume going forward. But naturally, there will be some short-term reaction to the higher cost that is going on, because many people's, especially high-frequency traders' algorithms are already made on this kind of numbers. They will have to recalibrate their models to ensure that they don't go into losses with higher per transaction cost coming in the form of higher STT.
Okay, that's the word coming in from the top boss at NSE. But with that, I'm afraid we're completely timed out on this very special budget coverage from Ankur, me, and the team that put this show together. Thanks so much for tuning in.